What's up? What's up? Thank you for joining Cookie Jar Trading. I am your host, Eric Foreman. We are on day four of the journey from $1,000 to $1,000,000, and it's been a rough day. Let's kind of just start off just like that. But just with master traders or traders that's really handling the business with experience, you don't throw in the towel. You just find ways to get back into battle. So that's all I was doing today. But I'll share that in a second. Wanted to start off just kind of reviewing Forex Factory. I know we had reviewed it a little bit on Sunday, but wanted to check in, being that pretty much starting tomorrow, Thursday, Great British Pound, we got a wealth of news coming through. And if you guys remember my video on Sunday, I had made mention that we also want to keep in hindsight that the U.S. government will be coming to a decision, hopefully tomorrow or Friday, as to the new bill for the pandemic, the new House Act. So depending upon how that goes and the direction they take, or if it's going to be an extension, because DC or Congress and the Senate and all of the political figures, they take this 2-3 week break in the month of August and will not be returning until closer to the end of the month. So the decision has to be made by this week, by tomorrow, by Friday, because if not, then it's pretty much going to be delayed all the way to the end of this month. And then things are not going to really be sorted out again until possibly September. So it's important for things to move in motion now. So that's critical. I'm not in any pound trades at this moment. Obviously, I was in pound dollar yesterday. So we'll take a peek at that. I'll show you guys exactly what transpired with that. We got a little US dollar news. We got some Aussie news later in the evening tomorrow. And then going into Friday, we have the non-farm payroll, the CAD unemployment rates as well. So Friday is going to be hectic. So a lot of traders do not like to trade or prefer to trade on these days. I personally don't mind. I'm looking at the charts for my technical review, and if I see certain activity that may line up and the news may help assist push the trade in that direction, then I'm just sticking with my chart analysis. I don't allow news to determine whether or not I should get into trades, whether it's good news, bad news, it's all irrelevant. So I think it's just there for some understanding. So if there are any pound pairs, I was looking at pound Aussie, one of the other trades that I had called out, not on my weekly analysis, but I had called it out yesterday with a friend of mine, and we just didn't take the trade. But also, most of my capital was tied up with pound dollar, so I wasn't going to be able to take the trade anyhow. So let's look at that pound dollar trade real quick, and what transpired. Right, so I was in the move, but obviously got stopped out because my stop was at 1.31131. So roughly, and we could just quickly edit this. 1.131. So that's where my stop was at. So by the time it pushed up, I got splashed out of the move and took a nice little loss of $60.90. So when we look at my account history, that pound dollar trade is there at a loss of $60.90. So not great. So it has eaten up most of the profit and win that I had got early on Monday, with the euro dollar trade to start the week. So we've seen a decline in that now. So I think I'm only up at this point $1.75, because there's constant swaps and fees as I take these trades overnight and hold. So now down to $1.75 in profit for the week. We're gonna try to shift and change that up with this euro dollar trade, which I'm gonna get into now. But again, I do want to highlight just some stuff on pound dollar, right? So I took the trade in anticipation. I think there's some things that I could have done better. I looked at it yesterday. I made mention that these two little wicks was a concern, because it's kind of using the 8 MA as support, so it's potentially going to push up. And then also looking at the weekly, we've already broken above the 200, pushing up as well. So there were some factors, and the main thing that I had mentioned was this bull 180 here, which is usually a trade that I would take. Is one of my Cookie Monster trades, but I still ignored it, which is not good trading psychology at all, because I saw that early on, and I could have gotten out early on. But I wanted to kind of see what happens here at this 20 MA area. We ended up breaking through price, and then it was a fake out break or pierce below the 8 and 20, and then pushed back up, and then I just got tapped out. So not a bad trade. It just didn't go my way. That's all. You're not gonna always win. You have to be willing to accept the losses that come with the game. It's a part of it. Not going to win all the time. So at this moment, out of our two trades, we are currently 1 for 1. One winner, one loser. Just about equal balances. And of course, this trade should have been a lot less in regards to a loss had I just cut my profit here when I got that bull 180 sign. But I wanted to hold and just kind of let price play his part and do his thing. And obviously, you also don't want to allow your your losers to be insurmountable. But again, we work off of that risk to reward ratio, right? So if I'm in a trade and I lose $60 on it, that means my potential gain is a potential of 120 or so. And if you remember with pound dollar, my target was going to be a potential cone trade. So we was looking at what I have marked here. Potential of $230. So to lose 60 on a potential of 230, I'm not really sweating it. I did what I could to watch the trade and see what was going on, but they just pushed price higher. And that wasn't the anticipation. So take that loss and keep it moving. That's it. So moving on to euro dollar, this one is going to be a little bit of a fight. It has been a fight. As I mentioned yesterday, it's probably a trade I should have cut or should have not gotten into from the jump. But as soon as I had entered down here on a 0.10, like assuming follow through, and there was no follow through, price ended up pushing back up. And then we've just been going for a ride since then. But the reason why I didn't get out the trade, right? So I'm gonna share this with you guys, and this isn't in my my playbook, although it is one of my top plays. It's in my original playbook that I had wrote out a few years ago, but I didn't update it into this current playbook. So why didn't I exit this trade? So the move is we get a false break below it. It shoots back up. Price is starting to work higher and higher. So what I recognize is that, okay, like if price is going to move upward, at this point, I'm already down 100 and I think I was down as high as like 160 pips, which is ridiculous. So like if price is going to work higher, then what I'm going to watch out for and then execute on is to see if we get a price rejection up in this resistance area. Because what's going to happen is what I call M formation, right? So is when you get this nice little M, this letter M kind of appearance on the chart. but that second leg has to officially kind of reach that first leg. So it did. So as soon as it got up in that price area, loaded up because this would be one of my Cookie Monster trades. And if you know from my playbook, any Cookie Monster trades load up in a position. So this actually worked out a little better for me because I was in negative equity because of my original position, point 10 down here. So to sell off high into this range is gonna also offset some of that loss. So by the time we reach back down here, hopefully, I'll be kind of doubling and maximizing even further on profit. So that's exactly what I did. Instead of running in fear or just like I'm skating out of here, I had to adjust my stop loss. I was like, I'm just gonna let it run up, see what happens in this price area, and if we get a rejection or if we start consolidating, I'm going to sell off. And we started consolidating. I think I was looking at the 1 hour. Price just kind of started going back and forth, and then I just was like, I'm gonna load up. So I loaded up 3.5 position or 5 cent positions here, and then I saw that break down, and then I was confirmed for me. So I added another point 0.5, a 5 cent position there, and then price broke down again. It broke this 8, and then I was like, I'm gonna add another position on this, and then let price kind of play and do its thing now. And I think I maxed out what my free margin is at this point. So I'm down to 44, running it very close. And of course, I usually wouldn't prefer. Let me make it clear. Of course, I wouldn't do this on a normal basis, but it's like 2 trades in one now, because this was my original trade, and had I closed out or got stopped out, then it would have been what it is. But these 5 cent positions up top I'm calling it a whole new trade. So on my trade journal, it's a whole new log, because I'm looking at it very differently. It's an M setup. That was the reason why I entered this trade. It's a total different strategy. So I kind of have 2 trades in one. So my free margin is tightened up now because of this point 10 position that I have to now allow to work, and hopefully we get that pushed down, flowing into tomorrow and Friday. So I'm still anticipating a down move. A lot of times before a big cone trade, price will kind of just willy-nilly and just misbehave a little bit. Let me move these lines. But price will just kind of misbehave, and we'll see all of this backlogging and all this nonsense that's going on. But ultimately, we'll get a big move down, a break at the 8, and I'm just going to let it ride all the way down to the 20, even if I have to take it into next week, which I'm fine with. So as you can see, most of my 5 cent trades are in profit, 16 pips here, 16, 16, 2, and I'm down 13 on that last position as price is just kind of consolidating now. But my main position, point 10, is down 142. So a lot of trades you might be sweating a little bit, but I ain't losing no sleep and I'm not sweating. Because again, that's part of the game. You have to be willing to accept those losses. You have to be willing to embrace it. And as I said in the beginning, it's a part of the game. So if you've done your best to manage the trade to the highest capability to offset a loss, your analysis is still looking pretty rock solid. You can intertwine and intermingle a second strategy for a second opportunity to offset some of that loss, then go for it. But that takes time. So for me, I'm able to do things like that because I'm familiar with a lot of moves. I would have probably even maybe hedged this whole move if Awanda allowed me to hedge, but I can't hedge. I'm only able to play the trade in one particular direction. On a foreign broker, you can hedge. On this particular platform, you cannot. So I have to play the game as strategically as I can, and I'm glad we had a nice run up on this, and now I'm looking to for the second leg of the M to start working its way down. So we'll see exactly how it plays out overnight. Since pound has a lot of news that might influence a little bit of the euro, I do want to kind of transition back to see what that news is going to be about specifically. Um, I don't know why it's on July. Oh, I gotta reload. Um, yeah, definitely want to see what that news is going to be flowing about. Monetary summary. So I might read up on that just to see how much influence it might have on my euro pair, um, and see if we're going to get some activity in my favor to the downside. But other than that, uh, so far good. I'm still feeling very good about this week. Finishing off in profit at a reasonable profit and working through the process. So I'll keep you guys posted. We'll see how tomorrow goes. But yeah, happy trading. Best wishes on y'all end for those that are trading. And thank you again for joining. Hit that subscribe button, click that like button, share it with a fellow friend, a fellow trader, and get some of this knowledge and this work, and enjoy the journey with me as I work towards from $1,000 to $1 million. But yeah, have a good one, guys. I'll catch you tomorrow.